What do you make of the market's performance today? Again, losing a bit of ground. That's very much also the case in the last session and a few others.
Yeah, thank you for your time. Well, we've been seeing this trend over and over for the past two weeks, and I believe that we are yet to see further declines in the coming weeks. I'm of the opinion that the market briefly corrected over January, taking into account that just before Christmas last year, we saw most counters quite depressed. So I think most investors are profit-taking, and also that people are looking elsewhere into other sectors of the economy that are quite profitable, e.g. The real estate sector.
All right, we are seeing a slew of results coming out, Henry. Standard Chartered, obviously, today. Pre-tax profits up 14% to 7.7 billion shillings. What do you make of Standard Chartered's results?
For Standard Chartered, being more of a profitability trend, well, it's well within what we expected in the market. Certainly not really good as the likes of NIC Bank and the likes of Equity, but all in all, I mean, there are good results. Looking at basically two key things: looking at their loan book, they're able to grow that loan book, and also they're able to attract some deposits from clients. So these two parameters gave them that impetus for growth for the last financial year.
Obviously, the cost-to-income ratio comes in at 42.6%. It's a slight increase, but where do you think they're going to get to a situation where they're making more as opposed to spending less by way of acquisitions or whatever other expansion plans they have?
Well, I think the point of turnback will be once we start seeing results from the recent acquisition of the Barclays custody business. I mean, as the CEO reckoned in the investor briefing today in the morning, that they were quite keen to see that the gains from that particular investment in this coming year. So once we factor in that, we are certainly likely to see that cost-to-income ratio come down. And for Standard Chartered, it has been quite an efficient bank. So their continued investment in technology will certainly underscore the lowering of that particular ratio.
I'm glad you mentioned technology, because that's really been the underscore for most of the banks, and the improvements that we've seen across the board in the banks. Expansion into East Africa, introducing technological innovations such as mobile banking, increasing their customer numbers. It seems to be the standard model. Is that a business model that's going to sustain growth for Kenyan banks going forward?
Well, certainly, because if you look at World Bank reports in terms of mobile penetration, and you look at financial penetration, if you look at two of these parameters, they seem to be concurrently moving together. I mean, if you look at what has happened with the M-Pesa, for instance, that even more and more banks are coming into that platform to effect their transactions, certainly it's going to underpin how banks are going to perform. If you look at the likes of Equity, who is, I mean, the bank that is quite heavily involved in the mobile platform, we've seen they're able to tap into the customer numbers. They're able to offer a wide array of financial products, which again is in line with what we call financial penetration. So my view is, at least for the next coming 2 to 3 years, mobile technology is going to underpin how banks perform, particularly at the fees and the commissions category of income.
You mentioned Equity, and of course they had stellar results in the previous week. But analysts are concerned that for investors wanting to buy the stock, it's a little bit rich, it's a little bit expensive, a PE ratio of about 15. And that's generally the story of some of the top tier banks, PEs of anything between 9 and 15. How does Standard Chartered compare?
Well, if you look at the industry PE of around 12, certainly Standard Chartered is marginally higher from that industry PE. But if you look at, say Standard Chartered as a stock to invest in and Equity, certainly those two counters do have totally different parameters that dictate how the stock performs. If you look at Equity, it's a highly volatile stock in the stock market, whereas Standard Chartered is more of an income stock in the market. So I think what drives the stock price on each of the counters, it really depends on which class of investors are active in the market. For instance, now you find that most fund managers and institutional investors are quite keen in the market right now. So, and that's why you find the likes of Standard Chartered holding off and being able to again outperform the market.
Let's look at other sectors. Kenyan interim half-year results were out. Pre-tax profits up 11%. Total revenues also up 11%. What do you make of Kenyan?
Well, Kenyan, going forward, I still maintain a buy because if you look at the money they raised from their bond they issued, that is sometime last year, but one. They have invested quite heavily in geothermal technology and also refurbishment of some of the hydro power plants. So I believe, in my opinion, that once the geothermal earnings start trickling through into the top line revenues, that profitability for this particular company is going to be higher. I mean, you look at what they got from the drought, whereby their earnings were sort of depressed. So going forward, if they invest more, they diversify from the hydro, we're likely to see good results going forward.
Let's talk about other sectors. We've been told that this week a stock to watch, housing finance.
Yes.
Obviously, they've done really well by way of the bond issues that they launched last year. They're also involved in some sort of a collaboration with the Kenyan central bank, just by way of also trying to raise a little bit more money on the secondary markets. Would this be a stock for you to buy, to watch?
Well, yeah, I maintain that outlook for myself because looking at housing finance, I mean, the success of their bond really gave them the much needed funding to push forward their strategy. And if you look at the housing sector in Kenya, there's still a huge deficit in the middle class. So I think by issuing a bond, the company really set the tone for them to really capitalize on that middle class. And if you look at the current housing developments taking place in Kenya, I mean, you tend to see that that return coming into the company through through the dividend and through the bottom line profits for the company. So for me, housing finance is it's a buy for the long term.
But I mean, talking about that housing boom, Henry, there is still the challenge. For instance, when we look at the industrials such as the cement manufacturers, Ati River is doing really well. We're seeing their share price up 36%. But with regards to Lafarge, for instance, or Bamburi in particular, there have been some challenges by way of their own earnings. What is it about the dynamics within the various industrials that means some benefit and others are not benefiting as much?
Well, if you look at the cement sector in itself, it's quite an interesting sector because you look at you have to look at the income that comes to the sector. If you look at the cost of cement in the recent one or so years, there have been cheap imports from China, and also that the prices have been declining because for them to be competitively priced in the market, they would automatically have to reduce the price. Then too, they have to contend with the high cost of power and also cost of operation. So these two factors are coming in and are quite, they're depressing the earnings for these particular companies. And two, also, you find that in the Kenyan market, new players are coming in. In the last, say, 1 year or so, you find that there are two new players in the cement sector. We're expecting another player to come in probably in the next 2 years or so. So all these factors will lead to a supply, in cement, in cement in the market. So my opinion is, for a company that is not highly efficient in this particular sector, we're likely to see the company is likely to witness some pressures from the cost of cement.